Let's talk about one of the most powerful wealth-building tools you can have as a South African. And thanks to a very recent update, this tool just got a massive upgrade. We are, of course, talking about the tax-free savings account.
But before we dive in, let me ask you something. Have you ever felt like you're putting money away, you're investing, but you're just not moving forward as fast as you think you should be? Well, there's a really good reason for that. There are a couple of invisible forces out there silently eating away at your hard-earned money. So in this explainer, we're going to break it all down. First, we'll look at the big challenge every saver faces. Then we'll reveal the tax-free solution. We'll get into that huge update from the 2026 budget, make sure you understand all the rules, and then really unlock its power for long-term growth. Finally, we'll figure out exactly where this fits into your master financial plan. All right, let's get into it. The savings challenge. You see, to really build wealth, you have to know what you're up against. And your money has two major enemies that are working against you 24/7. It's like this constant battle. On one side, you've got your growth, the returns your investments are making. Awesome. But on the other side, you have taxes and inflation. Think of taxes as taking a direct slice out of your profits. And inflation? Well, that's the silent thief, just making everything more expensive year after year so your money buys less. Together, they create this drag that can seriously slow you down. Now, to help us fight back against this, the South African government actually created a brilliant tool back in 2015. It was designed to be like a financial shield, specifically to help you beat those two enemies and just get more people saving for the long term. And that tool, of course, is the tax-free savings account, or TFSA. Now, here's the most important thing to understand. A TFSA isn't an investment itself. It's more like a special wrapper you put around your investments, things like ETFs or unit trusts. And this wrapper completely shields all the growth inside from the taxman. Whatever you make, you keep. Okay, so that brings us to some really exciting, very recent news. The 2026 budget dropped a major update that is, and I'm not exaggerating, a game changer for every single person trying to save and invest in this country. So picture this. February 25th, 2026. Finance Minister Enoch Godongwana gets up to deliver their national budget speech. And buried inside all the numbers and policies was an absolutely fantastic nugget of information for all of us. And here it is. He announced that the annual limit you can contribute to your tax-free savings account is going up to 46,000 Rand. This is such a big deal because it means you can now get more of your money into that tax-free wrapper way faster than before. So let's look at what this really means for you. The annual limit is jumping from 36,000 to 46,000 Rand. That's a massive jump. But the real magic is what it does to your timeline for hitting that lifetime 500,000 Rand contribution limit. Under the old rules, it would have taken you nearly 14 years. Now, you can do it in under 11. You've just bought yourself 3 extra years of tax-free compounding growth. That is huge. So with this new higher limit, it's more crucial than ever that we all know exactly how this account works. So let's run through what I call the big 3 tax advantages. You have to know these. First up, no dividends tax. Normally, when a company you've invested in pays out a dividend, SARS takes a 20% cut before you even see it. But inside a TFSA, that 20% tax just vanishes. You get to keep and reinvest the full amount, which seriously turbocharges your growth over time. Number 2, no interest income tax. Any interest you earn in this account is 100% tax-free. No questions asked. This is a massive win, especially if you're in a higher tax bracket and you've already used up your normal annual interest exemption. And the third one, the real monster for long-term growth, is no capital gains tax. Let's say you invest for 20 years and your portfolio grows by a huge amount. When you finally decide to sell, you pay 0 tax on that profit. Nothing. Outside of a TFSA, you could be paying a tax rate of up to 18% on that gain. Okay, but with great power comes a few rules you absolutely have to follow. First, remember there's a lifetime contribution limit of 500,000 Rand. Second, do not go over that new 46,000 Rand annual limit. If you do, the penalty is a brutal 40% on every Rand you overcontribute. Now, this next one is critical. If you take money out, you can't put it back. That contribution space is gone forever. And lastly, you can have as many TFSAs as you want, but that 46,000 limit is the total across all of them put together. So now that we know the rules of the game, let's talk about how to win it. How do we unlock the real, mind-blowing power of this account? Well, it all boils down to one beautiful concept: uninterrupted, tax-free compounding. This quote right here absolutely nails it. You have to change how you think about this account. It's not a piggy bank for your holiday fund. It is a high-octane investment vehicle. To really make it work for you, you need to fill it with assets that are built for growth over decades, like stock market ETFs, not just cash that's going to get eaten by inflation.
Let's make this real with an example: saving for your kids' university education. I mean, we all know education costs in South Africa are going up way, way faster than everything else. It feels like an impossible target to hit.
Well, look at this chart. This is the aha moment. It shows what happens if you invest that new maximum, about 3,833 Rand a month, for 18 years, from when a child is born. The bar on the left is what you'd have in a normal taxable account, where tax is constantly dragging you down. The bar on the right, that's the TFSA, all that growth completely protected. The difference in the final amount of money you have is, frankly, staggering.
So, how do you get that result on the right? It's actually a pretty simple strategy. Step 1, start now, today, as early as you possibly can. Time is your superpower. Step 2, automate it. Set up a debit order for our 3,833 a month and forget about it. Max out that allowance without even thinking. And step 3, treat it like a vault. Do not touch it. Remember, you can never get that contribution room back.
Okay, final section. We've established that the TFSA is an absolute beast. But the big question is, where does it fit in with everything else you're doing financially?
The classic debate, TFSA or a retirement annuity. Well, here's the thing. They do different jobs. An RA gives you a tax break right now. You get to deduct what you contribute from your income. But your money is locked away until you're 55. A TFSA gives you zero tax break now, but all the growth is tax-free on the way out. And your money is technically accessible anytime, though you really shouldn't touch it.
So you see, for most people, the answer isn't either or. The smartest play is to use both. Use your retirement annuity to get that fantastic upfront tax deduction for your core retirement savings. And then use your TFSA to build this amazing, flexible pot of completely tax-free money for other big goals, or even just to give yourself extra tax-free income in retirement.
Look, the 2026 budget has given every single one of us a bigger opportunity to build real wealth. The new tax year is here, and your new, bigger 46,000 Rand tax-free allowance is officially on the table. So the only question left is, how are you going to use it?